Those have very low loss rates. I mean, zero in many cases because you're fully collateralized by the Bitcoin. It's a liquid market. Technically, the only way that you could really, as a lender, lose money is if Bitcoin has a very liquid loss in price. So it basically it would lose value so quickly that you can't even sell the collateral and recoup the loan. So outside of that very specific scenario, it's a mostly risk-free lending. You'd expect the rates to probably go down eventually, but it's not a market that I follow super closely.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. New research suggests that Bitcoin remains highly profitable, even after months of sideways price action in the BTC market. Bitcoin is currently being traded within a strict framework. Many investors are not witnessing their investments in BTC diminish, as the current price remains stagnant. Behavior as establishing equilibrium. According to Glassnode, various on-chain metrics indicate that Bitcoin is currently experiencing a period of consolidation rather than capitulation. This sideways price movement often leads to investor boredom and apathy, which seems to be the prevailing response across all Bitcoin markets. BTC prices are consolidating within a well-established trade range, and investors are generally in a favorable position, with over 87% of the circulating supply held in profit. Market value to realized value metric shows that on average, BTC is still up by more than 2 times or 120% compared to its purchase price in USD terms. The one-year average value of the market value to realized value ratio is currently at 86%. This suggests that the macro uptrend remains intact, as the ratio remains above its yearly baseline. Adding commentary to the most crucial points on the radar is the aggregate purchase price for Bitcoin's speculative investor base, also known as short-term holders. According to the most recent data from a statistics resource, the current value of Bitcoin is $664,000, even though any potential gains are diminishing. C entities are not currently preparing for a mass sell-off at current prices. Glassnode currently. There is a noticeable trend among short-term holders who are sending around 17.4 billion coins per day to exchanges. However, this figure is significantly lower compared to the peak of 55 billion coins per day, which was recorded when the market reached $73,000 in March. During that time, speculation levels were reaching excessive levels, and lots of things Lyn Alden discusses, so please watch the video to end, and share this video, and subscribe our channel. Everyday Finance. Thanks.
I think that'll less likely be an issue for a while because there's not that much demand for Bitcoin denominated loans.
Yeah.
And historically where there have been, it's for leveraging. It's for, you're borrowing Bitcoin, then you're buying Grayscale, for example. That was kind of an old trade of the past. There's not a lot of like commercial uses of a Bitcoin loan, while it has this kind of big price variance. So I think it's less about that and more just about, exchange hacks or custody hacks and things like that. For example, I don't really expect Fidelity or BlackRock necessarily to fractionally reserve it or rehypothecate it because it's such an easy mistake for them to get caught out on it. But it's possible. So for me, I think the bigger risk is probably state confiscation. That if everything kind of gets pooled into big, large buckets, they can say, look, these things are no longer withdrawable. And you can make up reason X, Y, Z. You can say it's
6102 in our Bitcoin.
Yeah, or at least saying, it's walled garden Bitcoin, and we can't let it into the wild because of terrorist financing or whatever the reason they can do. That I would consider probably the bigger risk, because I'm less concerned around how Fidelity manages their Bitcoin or BlackRock. I'm more concerned with what they might be told to do with it one day.
Because they want to steal it? Because their own economy's screwed? Their own currency's screwed?
It could be that reason. It could also be, over time, the financial systems become more and more surveilled, more and more controlled, and they don't really like free-range Bitcoin too much. It's harder for them to
Free
control
range Bitcoin.
free range Bitcoin. So they could eventually clamp down on that, especially if there's some major negative event and people get very emotionally driven. Like
Yeah.
imagine if like 9/11 was obviously a very tragic event, but then they were able to get the Patriot Act through fairly easily, and they were able to drum up people's desire to go to war with a country that wasn't even involved in the attacks, Iraq. Imagine if there's some sort of similar major event, and they say, look, we have to clamp down on Bitcoin. We can't let terrorist financing happen with it, or we can't let XYZ, or we have to have more control over this. And you can get kind of an excuse to block the exits. Even just financial repression. Like, for example, when Argentina is having a currency crisis, and they pass things saying banks can't offer it to their customers, or even fintech companies can't offer it, and they never say it's because we're having a currency crisis. They say, look, it's money laundering and AML, and we have to maintain bank stability. They'll say any number of kind of normal sounding jargon for why they can't do it, when really it's because they want to slow down their currency crisis. You see that with Nigeria, you see that with Turkey. And the way they're often phrase it is either something like that, like we want to do safety and stability, or they'll blame, quote, speculators. The people are speculating with the currency. And so they'll try to block the exits there and kind of demonize a certain group. So I do have concerns around, in many jurisdictions, eventually a sovereign entity kind of taking over those big Bitcoin honeypots.
Bitcoin's performance in June has seen a decline of approximately 3.2%. However, there is a possibility of a turnaround before the end of the month. Examining the effects of Federal Reserve liquidity on the macro environment of Bitcoin has consistently shown a strong correlation over the past few months. The relationship between Bitcoin and Federal Reserve liquidity continues to surprise me, as I noted in my commentary. It appears that there will be a bottom in liquidity within the next 10 days, followed by a subsequent surge. Examining the chart from his exclusive macro data resource, it becomes evident that BTC has experienced price highs and lows. Notably, there have been local peaks and troughs in Fed liquidity. Even the recent all-time high of $73,500 in mid-March was accompanied by a liquidity shift. Spike provided an explanation on how liquidity is calculated, specifically in relation to macroeconomics. It was confirmed that the figure is derived from a combination of federal assets and repo markets. Recent Treasury data has highlighted some concerning short-term challenges for Bitcoin. Specifically, there has been a decline in inflows to U.S. spot Bitcoin exchange-traded funds. This is a reversal of the trend we saw in early June, when these funds experienced their second highest daily inflows on record. However, over the past 4 trading days, there have been net outflows. According to monitoring resources, including the United Kingdom-based investment firm Farsight Investors, the total outflow over this period amounts to just over $700 million. While this is still lower than the outflows seen in June, it is worth noting the shift in investor sentiment. Anticipation is growing for a significant inflow of $4,886 million in the third quarter and beyond. A new wave of institutional interest in Bitcoin is expected, as U.S. wirehouses are projected to gain access to spot ETF products. This development is a key point on the radar for those observing Bitcoin's evolution into a heavyweight investment class. Among those interested is Cathie Wood, the CEO of asset manager ARK Invest and one of the spot ETF providers. It is worth noting that no platform has approved Bitcoin yet, so all the price action has occurred prior to approval. We are still at the beginning stages of this transformation. Let's get back to Lyn Alden interview.
But I think also part of the issue is people underestimate the risk that they take on. And so with DeFi, it's less risky for the borrower, but it's very risky for the lender, because in addition to liquidation risk, you have hack risk.
Yeah.
And that's something that often gets kind of overlooked, I think. So it's not necessarily priced accurately. But I would expect probably over time for the Bitcoin collateralized lending rates to go down, because if you look at mostly how they work, like the ones that do it properly, like Unchained, for example, there's no rehypothecation.
Yeah.
Those have very low loss rates. I mean, zero in many cases because you're fully collateralized by the Bitcoin. It's a liquid market. Technically, the only way that you could really, as a lender, lose money is if Bitcoin has a very liquid loss in price. So it basically it would lose value so quickly that you can't even sell the collateral and recoup the loan. So outside of that very specific scenario, it's a mostly risk-free lending. You'd expect the rates to probably go down eventually, but it's not a market that I follow super closely.
Actually, with Leden, they offer two different rates. They offer segregated protected funds and commingled, and I assume rehypothecated fund options, and you pay a higher rate to have it in the segregated wallets, which is a kind of interesting option because it's like, oh crap, I want that lower rate, but they're pricing in risk, and I think most of these things is quite interesting. I'd rather have my pricing coming in from risk, and I have the choice, than a central bank setting the price of money.
Yeah, I agree. And I think that then it just comes down to making sure that the terms are known to people. So one of the criticisms that people have against fractional reserve banking is that the depositor often doesn't really understand how that works. That it can be categorized as fraud because, like if I go to my bank and I sign up a bank account, and I'm signing whatever long things they're doing, it might say somewhere that they could have liquidity issues or something. But most people, when you ask them, a lot of them think the bank actually has their money.
Yeah.
And so it's like, would it be the same if everyone was kind of educated on what exactly they're signing up for when they sign up for fractional reserve banking? But yeah, in
they
general,
don't really want you to be educated.
Yeah, I think they don't really want you to. So I think you can argue that a free market, especially when it's an educated free market and people know what they're choosing, I think obviously that's better than a centrally controlled price for money.
Right. So do you think we will end up in a place with no central banks there eventually, long term?
I mean, if the more successful Bitcoin is, the more that makes that likely. I don't think it's going to happen in 5 or 10 or 15 years. But I think over the long arc of time, it's certainly possible. And that's why I'm less interested in kind of movements like end the Fed. And it's more like I'm interested in building an alternative and seeing that outcompete the Fed.
With the ongoing decline of the world's largest cryptocurrency, Bitcoin, short sellers are capitalizing on the situation, investing in the potential decline. It is concerning that the market may not rebound to $770,000, as indicated by the on-chain analytics firm CoinGlass. There is a significant $1.67 billion short position that could potentially be liquidated. Bitcoin has been attracting significant interest from investors and traders due to its potential to reach the $70,000 level. However, it's worth noting that Bitcoin has been trading below $70,000 since June 7th, 2024. The stock has been facing consistent challenges in gaining momentum, with its value dropping below both the 50 and 200 EMA. This indicates a bearish trend. Furthermore, if the market continues to decline, the situation may worsen Bitcoin. BTC has surged to a significant milestone, hitting the $60,500 mark. This has led to the liquidation of nearly $930 million in long positions. Additionally, the open interest in BTC futures contracts across exchanges has dropped by 10.99% since its all-time high on June 7, 2024. Avoiding BTC this season due to the ongoing downturn in the crypto market, particularly in Bitcoin. A crypto expert mentioned on X that the continuous price fall in BTC has formed a bullish falling wedge pattern. However, the trader also noted that stocks are reaching new highs, and we might observe similar momentum. In another post on June 18, 2024, a crypto analyst highlighted the current bullish market conditions and pointed out the significant liquidations of BTC and Ethereum. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.